Guys, oh boy, has the market absolutely dumped. And I'm going to tell you that this month, in the past month, I'm down 6% versus the market being down 12% or so on QQQ. And I have a lot of important things that I'm about to cover on what you should be doing with the market, what my opinion is of things that you should be investing in. I have some notes in front of me right now. I'm going to be talking about earnings. I'm going to be talking about different stocks like Apple, Meta, AMD, Palantir, and first and foremost, I just want to say that the Fed is trying everything that they can to make sure that the market is going to be smooth, and they're absolutely failing. The Fed is not even close to doing a good job. In fact, I think they're just insisting on letting everything completely collapse before they actually kind of do their job. Not saying they're not doing their job, but taking a look at what they plan to do with interest rates, and the market is basically pricing in a 50 basis point rate cut. That's pretty ridiculous, guys. I don't think that's going to personally happen, but the market is really spooked right now. And just taking a look at my portfolio, I'm not immune to this, guys. I'm still going down with the market. However, I'm down 6%, whereas I'm going to talk about Starbucks. I'm going to talk about some retail stocks, because when you take a look at retail stocks, they're in even more trouble. Starbucks and Nike in a lot of trouble. In the past 1 month, QQQ is down 12%. So I'm actually kind of celebrating in my community, because being down 6% when everything else is down 12% is actually a huge win. And that's a fact that I just showed you on the screen. There's no inspect tool or nothing like that. I'm literally showing you I'm down 6% versus 12%. So I'm admitting that I'm hurt, but I'm hurt a lot less. So there's a lot of things to learn here, guys, all right? And specifically, I want to talk about inflation right now, right? So inflation, they're saying has eased off substantially, but when you look at gas prices, when you look at fueling up your car and transportation, not really. A lot of inflation has sort of cooled down in certain pockets of our economy, but as a whole, they're also manipulating our CPI, okay? What I mean by that is CPI is a basket of goods, right? They're tracking a basket of goods, but they're taking certain things out of that CPI to basically manipulate the numbers to make it look like our inflation is actually going down when it really isn't, okay? Real estate prices, not really going down that much, as well as fuel costs. So I think there's a whole bunch of kind of market manipulation kind of going on right now. I'm not claiming anything. I'm just saying that's what it looks like to me. That's kind of my opinion there. And also, a lot of this stuff is political, guys. A lot of this stuff is political because it's an election year. I think rate cuts will help Democrats. I think that rate cuts will help Democrats. And that's why Democrats probably are trying to push more in that favor of a rate cut because it's going to help them out. Now, what the Fed does will impact the market. And I'm also not really clear on what's going to happen, guys. I'm not a genie. I'm not omniscient. I don't know what's going to happen, but I will tell you that I am making some smart decisions right now with dollar cost averaging. I am not panicking whatsoever. I'm not stressed at all about the market, even though I'm losing significant amounts of money. I'm doing far better than the overall market. So in many ways, I actually want to pat myself on the back, because being down 6% when the market is down 12% is an extreme accomplishment. Extreme. In 1 month, 6%. That's a 6% differential. Very, very huge right there. And I also want to highlight some earnings plays, guys. I know I'm all over the place in this video, but I'm just trying to lay out all these issues that I see and what we can do about these issues. And there are just so many to list. The Fed, inflation, rate cuts, and I briefly want to mention earnings, okay? So recent earnings reports from AMD and Microsoft were positive. Apple was also positive, but still we saw Warren Buffett cut his stake by, about 50%. So Berkshire Hathaway has the most cash that they've ever literally had. He has a lot of cash. So Warren Buffett is basically pricing in a big crash, okay? He's basically pricing in a big pullback. Now, there is some delay in information from 13F filings. So when you look at what, hedge funds and Warren Buffett, et cetera, are buying, there is some delay there. So it's not clear to me exactly why he cut his stake. And it's still the biggest position in his portfolio, but it's still very alarming to see an investor like Warren Buffett continuously raise more and more cash. Now, this is actually where I disagree with Warren Buffett. I don't believe in having cash at all. A lot of people might call me stupid, might call me crazy for not having cash, but I've done just fine growing 2 multiple 7-figure portfolios by not having any cash. And in fact, I see this as a big opportunity, guys. All the YouTubers there fear-mongering and telling you it's time to sell or you should be afraid, that is incorrect. It's factually incorrect. It's not even just incorrect, it's factually incorrect, because the market, when it pulls back, that's literally the time to be buying. It literally is the time for you to be dollar cost averaging. Timing the market and trying to get into cash is like the dumbest thing ever, okay? Some people will say, oh, I'm gonna time the market once, I was right. Listen, it's not about being right once. It's about who is right in the end. There's like a Russian saying, it's not who laughs right now, it's who laughs last, okay? It's all about who laughs last, and it's all about your long-term results, guys. I'm trying to put the power and the knowledge in your hands, okay? What's going on with the Fed right now? Very alarming, but it doesn't mean that we need to sell out of our positions. That means that we have to get into more high-quality companies, and right now, QQQ is just kind of going down a lot. But in general, I'm actually doing good on Chipotle, okay? I've sold some puts on Chipotle. American Airlines is still gonna be okay. Oil and gas like XLE, I have ETF there. I think that'll be okay as well. And overall, you can see that my portfolio, and Snapchat being the bottom of my portfolio, that's like my lowest position. It's like makes up less than 1% of my portfolio. And the top of my portfolio is Apple, which makes up the biggest part of my portfolio. I am still very, very bullish on Apple. They have tremendously good earnings, but it's obviously going to be dragged down with the rest of the market, as well as the Warren Buffett decision there to kind of sell some of his shares. So despite Apple having really, really good earnings, it's still going to dip. Guys, we can't control short-term dips. You really can't. All right, it's like I was saying earlier, it's like a flock of sheep, okay? A flock of sheep. When one sheep kind of starts to run, which is like typically the institutional investors, because they do have some insider information, typically, or they have some advantage data, which we don't have. So the first sheep goes, then more sheep are like, hey, why is that sheep alarmed? Let me follow him. And then the whole herd goes, okay? So that's what's happening right now. It's herd behavior and herd psychology. And that's why when I was studying in college for finance, I worked at Goldman Sachs, I have a finance degree, I had 2 hedge fund experiences, multiple millions of dollars in the stock market. All the stuff that I've learned is that herding behavior and human psychology is exactly what explains the market. And I will tell you right now, I am not panicking whatsoever. I have zero fear. Even if the market goes down 50%, I will actually be super excited to continue buying. So more things I do want to cover though is Tom Lee. This is a guy that I actually am looking at. I'm not looking at no Jim Cramer. I'm not looking at other YouTubers. They don't know what they're talking about. Other YouTubers definitely don't know what they're talking about. They're marketing experts. And CNBC, Jim Cramer, they don't know what they're talking about either. Also, it's all around fear-mongering, hype, getting views, getting attention. Now I'm in this game as well, guys, but I try to keep it as legit as possible, as straightforward as possible, no BS. I'm showing you what I'm doing, my gains, my losses, and my actual psychology, not to get the views. I want to actually tell you what I think. And the only person I'm actually looking at in terms of another person, Tom Lee. This guy is someone that I actually think he knows what he's talking about, okay? So Tom Lee is more of the honest side, and he was saying that basically NASDAQ could decline further. That's what he was saying. And he has been right about Tesla. He's been right about many things. And he has specifically talked about on CNBC. I'm going to save you the time. I'm trying to make this video quicker because I want to get this video out fast. I didn't want to put the CNBC video here, but basically he said, pay attention to the VIX. The VIX hit 65. Because the VIX hit 65, that means there's elevated levels of anxiety in the market. Now, that doesn't mean that you need to take action, guys. Elevated VIX just means that there's more premium to collect if you're selling options. It also means that there's more volatility in the market expected. I personally expect the VIX to go down. I personally think 65 is not going to happen for a very long time. We were in the 14 range for a very long time, and now we see a very big spike. And I think if you're selling at these levels, mistake, I think. Okay, I think it's a mistake. So I personally am selling certain stocks. I'm getting out of Shopify today. I got out of Shopify, but I personally am not scared at all of the high quality of the tech stocks, although they are down significantly, as well as Nvidia, which a good friend of mine, he has bought puts on Nvidia, and I was looking at him like, you're crazy. Nvidia is so bullish, but we do see some of these stocks with high price to earnings ratios, high price to sales ratios that are on the expensive side now pulling back. And it is painful, but I would not sell at these levels, right? Now, I also want to point out to you guys that if and when, not if and when the recovery happens, it's going to recover very fast. So although you're feeling a lot of pain right now, today, you're not really going to feel pain in 6 months from now or 12 months from now. The market's going to recover. Markets tend to rise. That's literally rule number one, okay? Rule number one from Buffett is don't lose money, which is like an obvious rule, right? I don't need to repeat myself. Oh, rule number one is don't lose money. Everyone knows that rule. That's already a cliche rule. My rule, guys, which I learned on Wall Street, is markets tend to rise. This is not a quote that anyone else will say on YouTube besides me, because that's my unique experience of what I learned on Wall Street is markets tend to rise, which is why I'm a perma bull, okay? I'm not one of the bears out there, although I realize that it's important to hedge your portfolio. It's like right now with covered calls, I'm being a little bit more aggressive to collect income. I'm not a bear by no means. Yes, my title, I need to get some clicks, right? Because if I don't make my title market crash, no one will click because everyone on YouTube does the same exact title. Unfortunately, that is the game on YouTube. But I'm being honest with you, I'm delivering you the information that I personally, in my heart, believe, which is do not panic, do not sell, do not cut your positions that are high quality positions. This is what I believe in my heart, and I'm telling you, I'm literally buying more stock. I'm literally going to be buying more stock. There's more things I need to cover in this video, a lot of important things actually. Kind of all over the place because obviously my emotions are high, not from the market, but from my students, my Discord community. They're panicking, so I feel really compelled. My 45-minute call today was like an hour and 15-minute call because I want to add extra support to my subscribers, to my Discord members. I want to give everyone extra support right now because on a mental level, this is very hard to deal with. It's not hard for me at all, guys. This is not hard for me whatsoever financially. It's also not hard for me from a belief perspective. Do I think we're going to recover? Do I have any doubts in my skills or my ability to invest? Not at all. Not at all. To me, this is actually easy mode. I love to see some struggle. This is actually a fantastic time for me to outperform and prove. This is actually the time to prove that no other YouTuber doesn't have my results. Everyone is losing more money right now. Nobody has bought puts. All the people fear-mongering right now, oh, dude, this is the crash. None of them bought puts. What's up with those guys? Nobody bought puts. Nobody even has the results of -6% versus -12%. Those guys are down more than -12%. Way more, guys. People holding NVIDIA stock, all these people that are just pushing NVIDIA, I'm sorry to go off topic. It's not off topic. I just want to point out that it can be really dangerous to be invested in just one stock. NVIDIA down 22%, okay? Tesla, I don't need to prove myself, all right? Facts speak for themselves. 6% down versus 12% down on the market versus other YouTubers way down, way more, okay? Facts speak for themselves, right? That was my Discord community. I want to talk about the opportunity in September because in August, you should be dollar cost averaging. You should buy more shares. However, you should have some dry powder. I'm going to contradict myself a little bit. If you have the cash, you should hold a little bit extra dry powder. I personally don't have much dry powder, but I think it can be wise to have a little bit more dry powder just to see what happens with the Fed stuff, just to see what happens a little bit more with earnings. You should be buying, but don't just, I'm going to put all my money into the market. Now, I don't think any of you guys are doing that. I think a majority of people watching my video and a majority of people investing right now are more on the cautious side. They're more scared. I'm going to sell everything. No, don't be that guy. Listen to me. 6% down versus 12% down in the market and YouTubers down. If they were transparent like I am, showing my portfolio exactly how I'm showing, they're not doing it because they can't. They can't. They don't have the experience. They don't have same results as me. Please don't sell. Now, I want to talk about the growth scare. Tom Lee says this is just a growth scare, okay? Tom Lee said that he thinks that the market right now is just a growth scare and everything will cover. I fully agree. I fully agree. I think this is just a growth scare, my personal opinion, coming from just Henry, just guy on the internet who is successful, but I don't have any credentials. Although I have more experience than everyone else. I don't have credentials, guys. I don't have a CPA, a CFA. I don't have those things because I wanted to be a coach. I wanted to help people, and I don't want to study and work on Wall Street. I don't enjoy working on Wall Street. I hated my job. I hated being in finance. I hated waking up in the morning. I hated having a boss, and I hated getting paid $85K to $120K. It was really not that much money when I can make more money myself trading options. I literally make way more money than that, and I don't have any rules. I don't have any regulations. I don't have to worry about any of the nonsense. All those. You know what I'm talking about. I think this is a growth scare. I think there's going to be a lot of opportunity in September. In August, it's probably going to be a bit shaky. I'm not going to lie to you. The VIX is high for a reason. I think it's going to be a bit shaky. Not much we can do there. My thoughts on the 50 basis point cut in September. Goodness, sometimes I feel like when I sit, I kind of look fat. But let me sit up straight. I just want to make sure I'm still on camera here. 50 basis point cut in September. That's what the market's pricing in. I personally don't think so. Mark my words, we're going to get a 25 basis point cut. Not 50 basis points. 50 basis points is going to be a bit high. But the market is actually pricing in a higher percentage. So we'll see on that. Now, I want to talk about some interesting points, which is low data. There's low data in terms of people are saying right now that employment numbers are really bad. But I think there's low data points. Because why? I think a lot of people are leaving the workplace. But if you look at social media, everyone is starting a new business. So I think what's actually going on is employment numbers are low because nobody wants to work for a company, for a big corporation, slaving their life away, especially at the lower level positions, okay? That's also a big reason why Starbucks is in a lot of trouble, Nike's in trouble, a lot of retail companies are in trouble. I was looking at CNBC. I like CNBC, I don't like the people always talking on CNBC. I do like that CNBC did a really deep dive research into Starbucks. And they were saying how stores keep opening up, but same store sales are going down. Guys, same store sales going down? I don't even know. Like, I want to take a bottle and I want to point to you how important, how dire of a situation this is. When you see same store sales going down, this is the end of the world. That is the end of the company. Now, Starbucks is not going to go out of business, but that is the end of that company rising higher. Now, Starbucks is going for a very good valuation, but I am no longer bullish on Starbucks. I really want to buy it, as well as Nike. But same store sales going down, guys, this is red line awful. This is essentially, you have 100 customers come to your restaurant, and then the next day 99, next day 98, next day 97, 96, 95, 94, your restaurant's literally dying. That's what's happening to Starbucks, unfortunately. Not unfortunately, I don't really care. We don't have much of a Starbucks position. We've done fine on Starbucks, but I'm just telling you, I'm pointing out the fact that retail stocks are in big trouble, huge trouble. Don't be invested in Starbucks, Nike. Don't be invested in retail. You need big brand right now, big brand. And Nike and Starbucks is obviously big brand, but it's a retail big brand, which is no go for me right now. No go. Absolutely not. Nike, same thing with their shoes. Too much competition. And I think small businesses right now are opening up. For example, Luckin Coffee, I know they had like this whole scam, but in China, Luckin Coffee surpassed Starbucks. Same thing with in China. Apple is not doing as well in China right now. Same thing with the Chinese automobiles tackling Tesla. So guys, right now it's a very interesting time to be invested in the market because I actually think it's a stock picker's market, aka it's my market. It is my market right now. I picked Apple, I picked many other good stocks which have led me to beat the market by a lot. It's a stock picker's market right now as well. I'm doing well on Palantir wheel strategy. It's down, but more or less I'm still doing better than the market due to the options themselves, because the options allow me to get premium and income. So the stock is down, but the options are generating income, which is hedging and protecting my portfolio and giving me that stability in the portfolio. And like looking at small businesses, that's where it's at right now. Small businesses is where it's at. And that's going to hurt some of the big brands for sure, hands down. So Starbucks, Nike, good valuation right now, but this is not a stock that I want to personally dollar cost into. I would dollar cost into Nvidia. I think Apple's great. Amazon went down so much, guys. I think Amazon's fantastic because Amazon's more of that marketplace. They're not really, yes, they have a brand, of course, but it's not like they have a big YouTube channel or big social media presence. They do, but it's really the marketplace. It's really the product business that's doing so well for Amazon. It's literally demand for the Amazon marketplace. So brands are on Amazon. So I'm not making an individual bet on a brand. I'm just making a bet on a marketplace and then being a middleman. So that's why Amazon is fantastic stock right now. Whereas individual brands are kind of hard to bet on because they go up and they go down and they can go out of business fairly quickly. So I don't really think we're going to get a 50 basis point cut. I think we're going to be about 25. I would say be logical. Be logical. Please do not get emotional. I am here on YouTube to educate, to help. I'm here to support you. Comment. I'm going to read the comments. Of course, my Discord community has access to me. I am here to support and to help you not lose money, to invest money wisely, to get to retirement, for that safe passive income. That's it. That's my whole goal in life. That's what I want. Please don't, if you want to panic and sell, that's up to you. My opinion is be strong right now. Be smart right now. All right. Catch you guys in the next video.